Hello, and welcome back to the 5th episode covering my growth portfolio. First of all, I wanted to do a little bit of an update on how we did this month. We're measuring from February 22nd to March 25th. That's when we stopped. The last episode was around February 22nd. So for this month, we did pretty well. It's kind of flat after this little run up, but in the end, the month was 5.31% up for the portfolio. Now let's do a quick comparison to some of the other indices. For the Russell 2000, we slightly edged out the Russell 2000 by about 1%. For the Dow, we beat the Dow a little bit more handedly this month at around 3% above the Dow. The Nasdaq is basically in line because of the similarities it has to my portfolio, but you can still see that it does slightly edge out the Nasdaq, and that tends to be a trend. It tends to slightly outperform the Nasdaq, which is what I want from the portfolio. I want it to be a little bit more of a higher quality version of the Nasdaq, and also it avoids me having to pay the 0.2% expense ratio that something like the QQQ would have if I were to buy that instead. So that's good. And then the big competitor is the S&P, which we also slightly beat by maybe 0.3, 0.4%. And that's also good to see, but this month was pretty close. We barely beat it. Looking back at just the entire max timeline, this is kind of what we look like against the S&P 500, which is the main competition that we're going against for these updates. And you can see that we have about a 72.49% return, and the S&P has gone up about 35.36% in that time. We're continuing to slowly separate from the S&P, which is good to see. Okay, I think we'll turn it back to just this month. So go back to February 22nd. Okay, and for the investment change, you can see that we went up about $2,100, and I have slowed down my net contributions a little bit because I think the market has gone up a little bit too quickly, and I'm just sort of taking a little bit of a step back from heavily investing. I think now is a good time to continue to slowly dollar cost average, but not buy too aggressively into the market just because of how quickly it's gone up and how big a lot of the returns have been recently. So yeah, that's the update. Now let's also take a look at my holdings and give a quick update on how everything's doing. We have this sorted again, worst to best. So bringing up the worst stock again, it's been Tesla for a while, and it continues to be Tesla. This stock obviously has not turned out how I would have wanted it to in the short run, but I still think that it has the potential and chance to be really good into the future, and I'm going to continue to hold it and just slowly add to it as I would all my other stocks. And hopefully eventually things will turn around, but I'm okay with Tesla lagging behind because every other stock pretty much in the portfolio has kind of picked up the slack a bit, and there's a lot of gains that kind of counteract the losses I have in Tesla, so that's a good thing. Then we have Unity, Moderna, and those are our three red stocks that are still in the red, and everything else is green. Apple is kind of taken a little bit of a dive. It used to be a lot more up, but now it's almost even again, and it might go into the red soon. I'm hoping it can turn around and just be good, but I'm fine with it getting to these lower prices too, because I think it's a decent buying opportunity, and I think Apple will continue to be around in the future, even if it's not like a super fast growing tech stock. Going down, you can see we have Meta is still at the top position for the most gains, and then CrowdStrike is doing really well too, And we have Nvidia here that snuck into the third spot. And that's kind of what I want to do for this episode, is highlight Nvidia and sort of what I like about it and also what I don't like about it, and just go over a lot of the stock fundamentals and kind of take a look at it and just basically judge it on, do I think it's too overvalued? Is it a good time to buy? Is it a good time to sell? What I think is the best thing to do with Nvidia right now, and what I'm sort of thinking and what I'm doing. So yeah, now let's take a look at Nvidia. Here we have the 14-year revenue graph for Nvidia, and you can see how absolutely insane this is. You have just insane growth the last 3 quarters. And one thing a lot of people will mention about Nvidia and just chip stocks in general is they mention like the cyclical nature. And for a lot of people, that's sort of a downside. And I completely understand, because you'll have these periods, like for example, in around the end of 2018, you see revenue decline. And these are like big numbers too. This is 24%, 30%, 17%. They lost a lot of their sort of revenue during this period. And you'll see the same thing right here in 2022. Not as bad, but you do see a 16%, 20.8%, 13%. And one thing I've sort of noticed with the cyclical nature is it's always about like a year for the down periods. Like you have this is about a year, this is about a year. Back here, this is like half a year, but kind of the lower numbers are all about a year. This is about a year too. So you'll have these like cyclical trends with like Nvidia and other chip stocks. And a lot of people see that as a huge red flag, and it can be, because it obviously means you could be buying in at the top of the cycle. Like this right here might be the top of the cycle, and it might go into one of these downturns, and that could affect it for who knows how long. But I feel like a lot of the criticism for it being cyclical are a little bit overblown, just because we have seen the cycles are usually just about a year long. Like if you're willing to endure about a year of like declining revenue, the stock will probably run up after that year. And the cycles, when it does get into the positive, are usually much longer than a year. Like for example, you'll see right here, this was about like 4 years or so of just uptrend. Here you have about about 2 years, and right now we're about a year into a cycle that's going upwards. So that's just what I wanted to talk about for like people who say cyclical nature of chip stocks. I think that sort of kind of highlights what they mean by that and how that affects Nvidia stock. You'll have these downturns. It's not just going to be consistently upward like you'll see with some stocks like Microsoft, but generally speaking, even with the downturns, you're still seeing trends upwards. Like the peak in 2018, it got you'll see all-time highs again in the revenue over here in 2022, and so on and so on. It continually grows even with the downturns. Now I think it's good to move on to the EPS for the stock. So for EPS, it's also really good to see this huge spike. But I think for a lot of stocks, people will like say Nvidia is like a meme stock, and it's not really like sustainable, or it doesn't really have the same like cash flows and consistency as like other sorts of companies in the market. And I think to a certain degree that is true, in that Nvidia does have more inconsistency. Like you'll see these like hump upwards, and then it will go downwards, and then it'll rise upwards again and downwards. Again, you're seeing the cyclical nature of the stock, although it does seem to be trending upwards in the long run. But yes, for short term, you could see these downturns. So inconsistency it does have, but it does generate just a ton of money, and it has been generating money for a while too. Like you'll see, ever since like 2016, even with the downturns, it's still generating pretty good free cash flow. And now especially the free cash flow is absolutely getting insane. So again, if you're willing to ride out these downturns that are usually about a year long, as you'll see, then you could see really exponential growth from Nvidia. And I don't like the comparison to a lot of like meme stocks like GameStop or other companies like that, because those companies don't even generate any of this like actual free cash flow. They don't actually have positive, and a lot of tech stocks don't have this positive sort of EPS. Like Nvidia is actually making lots of money. Like even if you argue that it's inconsistent, it still is generating a ton of money. And I think that's a big difference between Nvidia and a lot of other just growth stocks, is that it actually has the cash flows to back it up. It's not purely hype or speculation. And then I also just wanted to take a look at another stock's EPS. This is a stock some people might be familiar with. It is Apple. It is probably one of the best stocks to look at as like a benchmark, because it's one of the biggest companies and most reliable companies in the market. It's also just very respected by a lot of people. And it does have pretty consistent EPS. You can see, unlike Nvidia, this is more consistent. It does have like times where it'll slightly dip down, but it does seem quite a bit more consistent in terms of growth. But you'll see that like even Apple is making like 6.43 EPS on a trailing 12 months. And even though you could just call this like a lucky spike, I mean, Nvidia is like double that. So people talk about Apple as like a huge generator of cash and stuff, and they definitely are. But Nvidia is completely blowing even those huge companies out of the water in terms of EPS. So I think unlike a lot of the meme stocks, this one actually has cash flow to back it up, and I don't think it should be compared to other meme stocks that don't generate free cash flow. Now, is Nvidia worth it? Well, first of all, let's take a look at the forward PE, which obviously is really high at 39.53 compared to like the rest of the market that's typically around like a 24 PE. Now, you'll probably look at this and be like, this is completely not worth it. And I think that it definitely is a little bit overvalued now, and I would caution against like heavily buying into Nvidia. I think it's gone up way too much in like the past couple of years. But we still should look back at like this is 2023, and these PE ratios, forward PE, were all a lot higher than it is currently. So even though 40 is really high, I mean, it was trading at like 62, 61, 45 about a year ago. And so, I mean, if anything, you could argue that it was more overvalued back then compared to now. Now, how would I treat Nvidia, and how would I sort of view buying in versus staying on the sidelines and just watching? I think you have to be really careful, because I think there's a lot of FOMO, like fear of missing out, involved with Nvidia. And I don't think you should be rushing into Nvidia and just dumping everything in it because it's doing well right now. That's a recipe for disaster. But I also don't think you should completely ignore Nvidia just because it's ran up. Like, the same thing has happened to like a lot of people with like Google or Apple. It's like, oh, it's, you know, up so much from a year ago. I can't buy into it because, you know, it's a year ago it was so much lower price, and they just avoid buying into Apple or Google for like 10 to 15 years when they could have easily bought it in at any point and made a ton of money. I feel like if anything, my approach sort of is just to match Nvidia to like the S&P 500 weighting at around 5% currently. You just have exposure to Nvidia, so if it continues to go up, you'll do well. But at the same time, you're not dumping like tons of money into Nvidia and potentially getting burned when we go through another like downturn cycle, which is kind of inevitable. It's not. People will say that maybe Nvidia is no longer in that like cyclical sort of nature, but it does tend to look like it usually goes through those cycles, and I don't see why that would immediately just go away. So I think that we still probably will see downturn cycles, and depending on when you buy in, it could be really detrimental. I think that if you have a long-term approach, it's still fine if you buy in. Like, for example, now we're at the top of a cycle, but it's probably better just to try to match like the S&P 500 weighting at 5%. And that's sort of what I've been doing, is just slowly buying into Nvidia. It's not something I'm putting a ton of money into, and I've just been kind of consistently dollar cost averaging along with the rest of my portfolio to kind of have it be, a decent sized position, but not too big or not too small. And yeah, I hope you guys enjoyed watching, and I'll see you next time. Bye.